Hello and welcome to the Mulberry Hamilton tax video presentations. This one aims to outline how companies end up paying the amount of corporation tax that they do. Firstly, a gentle reminder of what a company is. A company is a legal entity separate from its owners and its managers. The managers are generally known as directors, and they will pay income tax on any salaries etc. that they receive from the company. The owners, they are known as shareholders, and they too will pay income tax on any dividends that they receive. The company, however, is taxed on its trading profits and its capital gains by virtue of corporation tax. Once the company accountants have correctly calculated the amount of profits chargeable to corporation tax, the corporation tax liability can be calculated at the relevant rates. In the UK, the financial year goes from the 1st of April until the following 31st of March. If a company's profits straddle over the two financial years, because its chargeable accounting period does not fall between the 1st of April and the 31st of March, then its profits will be apportioned accordingly, and hence two different types of corporation tax rates may apply. For the financial year 2009 to 2010, there are two main rates and a marginal rate. The first rate relates to the small companies rate, and this currently is at 21%, i.e. for profits between £0 and £300,000, the rate at the moment for the year 2009 to 2010 is 21%. For profits that exceed £1.5 million, the rate, known as the full rate, is currently 28%. For those profits that fall between £300,000 and £1.5 million, then the small companies rate marginal band will apply. Currently, this rate is 29.75%. Let's have a look at some examples of calculations to see how much corporation tax will be paid for various types and amounts of company profits. Here we have some examples of how corporation tax is calculated. As just mentioned, the corporation tax rates for the year 2009 to 2010 are currently 21% for profits from £0 to £300,000, 28% being known as the full rate for profits at above £1.5 million, and anything in between those two amounts are calculated currently at 29.75%. Now, calculation is quite simple. Here I've given you some examples. If we were to take a company that would be classified as a small company due to the fact that it would be under £300,000 worth of profits. If in this example we were at £250,000, we would just simply multiply that amount by 21%, and that would give us an amount of £52,500. If the company was giving us pre-tax profits of 1.7 million, then we would just times it at a rate of 28%, currently giving us £476,000. However, when profits fall in between £300,000 and £1.5 million, then, as mentioned before, small company rate marginal band will have to be used. In this example, I've given an amount of £720,000. How it is calculated is that the first £300,000 is still calculated at 21%. It is the balance after that that will be calculated at 29.75%. In this example, the balance would be the £420,000. So £63,000 would be the amount of 21%, and £124,950 would be the balance of 29.75%. Those two would be totalled up, and you would have your total tax bill for that year. However, a very important thing to bear in mind is when there are associated companies. Now, associated companies means that when one company controls another company by virtue of owning the shares in that company, or that one of the controlling directors in one company also is a controlling director in another company, then it is deemed to be an associated company. The significance of this point is that it will affect the bands here for the corporation tax liabilities for all associated companies concerned. What it means in an example here, if we was to have two companies that were associated together, then the bands here have to be divided by 2. If there were 3 companies associated, then the bands would be divided by 3, etc. In this particular example, as there are two, we have just simply divided 300,000 by 2, meaning the first band, £150,000, would be taxed at 21%. Any profits previously that were above 1.5 million would be taxed at 28%. As there are now two associated companies, it would mean that any profits above £750,000 would be taxed straight away at 28%. In the examples just given, where I've calculated for you the corporation tax liability, the significance of an associated company can be shown here. Previously, for a company having £200,050 at 21%, the tax bill was £52,500. Well, this would now change and it would go up to £61,250. Reason why is that only the first £150,000 is taxed at 21%, as opposed to previously when it was all of the £250,000 taxed at 21%. Unfortunately now we have £100,000 that falls into the small companies relief marginal ban, which is currently taxed at 29.75%, hence that has increased the tax bill. The example given of £1.7 million taxed at 28%, that still stays the same because the rate is for anything above £750,000. However, when we had the example previously of £720,000, given a tax bill of £187,000, there will still be small companies' marginal rate incurred on that. However, the bands will start far earlier. Of £720,000, £150,000 would be taxed at 21%. However, there will now be £570,000 taxed at 29.75%, giving a total tax bill here of £201,075, which is quite a big increase in terms of the previous amount, which is just over £187,000. And that is just simply due to the fact that there are associated companies concerned. A final point to mention, of course, is that HMRC will charge interest on any corporation tax that is underpaid, and equally it will charge penalties for any corporation tax returns that are submitted late.